This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 17th, 2015. Euro dollar. So the market remains locked within an intense downtrend after recently trading to fresh 12-year lows last Friday below 105. At the same time, with daily, weekly, and monthly studies highly oversold at this point, there is risk for a short-term correction ahead. We have seen a sequence of 13 consecutive daily lower tops, and if this sequence is broken with a break above 106.20, this would do a good job of triggering the onset of a much needed correction in the euro. However, inability to break or even close above 106.20 on Tuesday would keep the downside pressure intact and open the door for fresh weakness down towards the 103-104 area. Sterling dollar. So this market has been correcting a little bit in recent trade after breaking to fresh multi-year lows at 147 in recent trade. A push back above 150 would do a good job of triggering a more significant correction, although any rally should be very well capped ahead of 153 in favor of a bearish resumption towards the next key measured move objective at 143.50. At this point, only a break back above the 155.50 area would compromise the bearish outlook for cable. Dollar yen. So not much price action in dollar yen over the past several sessions, although we did see a significant development on the 10th of March when the market finally took out the December 7-year high at 121.85. That break sets the stage for the next medium-term upside extension and a bullish continuation towards a measured move of 128.15 over the medium term. At this point, any setback should be very well supported into the 118 area, while only back below 115.55, that low from December, would compromise the highly constructive dollar-yen outlook. Euro Swiss. So not much going on with Euro Swiss at the moment, with the market pulling back in recent trade, but finding some support well ahead of key support at 104.15 in the 105.15 area. At this point, the recovery structure still remains intact following that intense drop-off that we saw to historic lows several weeks back, and a break above 108.15 will confirm the recovery and open the door for the next major upside extension towards key psychological barriers at 110. Only back below 104.15 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend, with the market recently putting in a lower top at 79.13 and opening the door for the next measured move downside extension towards 73.35. We have since seen a low at 75.60, but the market is expected to take out that low sooner than later in favor of that move down towards 73.35. At this point, any rallies should be very well capped ahead of 78, while only back above 79.13 would compromise the bearish outlook. Dollar CAD. So dollar CAD has recently broken above key resistance at 128, which had been the previous 5-year high from late January, and this sets the stage for an eventual move towards the 2009 peak at 130.65. A close above 128 will now do a good job of strengthening the bullish continuation outlook, while inability to do so will suggest that the market could be poised for a trade back into the range, but any setbacks here should be very well supported ahead of 125 in favor of significant upside, while only back below 123.50 would compromise the bullish dollar CAD outlook. Kiwi dollar. So Kiwi has mostly been consolidating over the past several weeks, although a lower top is now sought out within the broader underlying downtrend at 76.14 ahead of the next downside extension below 71.76 and towards a measured move downside target of 67.35 further down. At this point, any rally should continue to be very well capped ahead of 75, while only back above 76.14 would compromise the bearish outlook. SPX 500. The S&P 500 recently traded down to as low as 2040 ahead of this latest minor reversal back to the top side. There has, however, been signs of the market putting in a meaningful top over the past couple of weeks, and the market could be poised for additional declines following a break below recent lows at 2040. At this point, previous support now turned resistance at 2087 should cap gains on a daily close basis, while only a close back above 2087 would compromise this outlook and suggest the market is poised for fresh upside back towards and above the recent record highs at 2120. A break back below 2040, however, will accelerate declines, confirm the more significant topping outlook, and open the door for a retest of psychological barriers at 2000 further down. Gold. So gold continues its declines from the January peak, with the market trading down to as low as 1147 thus far. But deeper setbacks are now expected, with the market now so close to in proximity to the 2014 multi-year low at 1131. At this point, only a break back above 1167 would take the immediate pressure off the downside.